This is Gerardo Del Real with Resource Stock Digest. Joining me today is the president and CEO of Taseko Mines, Mr. Stuart McDonald. Stuart, first time on the show. It's great to have you on. How are you today, sir?
I'm very well, and thanks, Gerardo. Nice to chat with you for the first time today. Appreciate the opportunity.
No, I appreciate the time. Let's get right into it. We talked off air very, very briefly, and I mentioned to you, one, that I'm a very, very big proponent of copper and how necessary it's going to be, right? There's a lot of commodities that are pretty and they shine and we want them and they're great to have and they're great hedges. But copper is one of those commodities that's absolutely essential for global net zero goals, the electrification of everything. And so when I look at potential speculations and investments, there's few companies that offer the near term, immediate, and future production profile that Taseko has been able to put together. And I want to talk about that here in detail in just a little bit. But before I get into that, can you give me a bit of background on you and kind of where you've been? Obviously, you have a pretty storied career, and I think it'd be good for everybody to get familiar with that.
Sure. Yeah. No, I've been in the mining industry now for coming up on 20 years, and trained as a finance background. Actually, trained as an accountant, but I've been with a couple of different mining companies before I joined Taseko. I was CFO of a company called Quadra Mining, and that was also a copper company. We operated about 5 different copper mines across the U.S., Chile, Sudbury, Ontario. So got a bunch of great experience there and a couple other stops, and joined Taseko about 10 years ago as CFO. And it's been a great journey here at Taseko. I think we've built out over the years built out a pretty exciting pipeline of projects, which I've been a part of, and with the CEO, with our CEO retiring a couple years ago, I've been able to step up and take the reins, I guess. And it's a really exciting outlook for us in the next 5 to 10 years here, and I'm just it's a great opportunity for me and for our shareholders too.
I mentioned myself being a copper bull. I'm very bullish on the copper space, and I want to get your take given your background in finance. But it's clear to me that, and it's very important for me to point out, that you are hyper-focused on making sure that you build out these low-cost assets in jurisdictions that are absolutely top-notch, right? And we see geopolitical risk around the world continuing to increase seemingly by the day. How much of a focus has that been over this past decade or so as you've put together this portfolio of, really robust assets?
Yeah, it's always been, it's always been a focus for Taseko. I mean, we have focused on top jurisdictions, Canada, the U.S. That's where our operating expertise is. That's where our operators that have kind of built the business have grown up in the industry, and that's where we think we can add value, add the most value. So, we believe we've got a very exciting portfolio of an operating asset and longer dated development assets in BC, and then also a very exciting near term opportunity in Arizona. With our Florence project. So we like those jurisdictions. There's other places in the world that you can go for high grade assets and things like that, but those other jurisdictions present other risks, as you noted. So we're very comfortable with where we're located.
Well, everybody talks about grade being king. I've always said margin is king. The grade means nothing if you can't extract it out of profit, right? So let's talk about that production profile, what it looks like now, and what you're positioning for and how you're positioning for that.
Yeah, I think you make a very good point there about margin, and that's always been our focus. I think if you look at Gibraltar, our Gibraltar mine, this is a large scale, large open pit. It's actually the second largest open pit copper mine in Canada, 4th largest in North America. But it's I would say when you benchmark it against global peers, it's definitely a lower grade mine. But we've been able to operate it successfully by really focusing on costs and being efficient operators. We can mill a ton of ore now at that mine for $12 or $13 a ton milled, And that makes it, if you benchmark us against other mines in the Americas, that's one of the most efficient operations around. So we can make money at lower grades. If you look at our recent track record, we've had good EBITDA generation. I think it was 200 million Canadian of EBITDA last year out of that operation, and it's really been a stable base for us to kind of build out our development assets with using cash flow from Gibraltar. So next for us, as I noted, is our Florence copper project. That'll become our second mine. That we're just awaiting a final permit, which we expect imminently here in the coming in the next few weeks or next couple months at least, and that will go into construction and should be online in kind of early 2025. That will have meaningful growth to our copper production. So at Gibraltar, we're producing maybe 120 to 130 million pounds. Florence is going to add about 85 million pounds to that. So very meaningful growth in the top line, and at the same time also a very low cost operation in Arizona. So it's going to bring down our overall costs and increase our margins, which is what this is all about. So yeah, it's a very exciting opportunity. I don't think there's many copper companies around that have that level of production growth ahead of them in the next 2 or 3 years. So yeah, it's exciting.
A part of why you're going to be very profitable there is the Insitu copper recovery process. For those that are not familiar with the benefits of that, can you please explain that to the audience?
Yeah, it's pretty innovative. It's what we're doing there. We're not digging an open pit. We're not tunneling underground. We're actually drilling a well field into the ore body and injecting solutions which recover the copper in situ. So there's no drilling and hauling and blasting and crushing and grinding, those typical things you would see at a mine. We recover the copper in solution out of the ground, and then we process that solution through a conventional SXEW or electrowinning process, and we actually produce pure copper cathode right on site. So it's refined copper that we're producing right on our site in Arizona, and that's going to feed into the supply chain in the U.S. for electrification initiatives and renewable energy and all those electric vehicles, all those things. We're producing it right in Arizona. So it's pretty unique, and it's the production method, of course, is low cost. We're going to produce copper at around $1.10. I think it is. I think our feasibility was $1.13 a pound. So it's low cost mining, but also a lot of environmental and ESG benefits from that operation and that operating method. It's going to be one of the lowest carbon emitting mines as well in the world in terms of carbon intensity. There's no surface disturbance. There's no tailings to deal with or anything like that. So there's just a lot of economic and environmental benefits here. So yeah, we're excited to get going on it for sure.
That specific project and the technology that you're employing, which again, I'm glad that you mentioned the lower environmental footprint, because that's becoming more and more important as well. But the project itself has attracted some pretty interesting strategic partners and some pretty interesting financing. Can you speak to that a bit?
Yeah. The big thing, the big announcement we had, I guess it was in December last year, we announced a strategic partnership with Mitsui & Co. and the U.S. division of that Japanese trading company. They have a cathode trading business. They were attracted to the project as a U.S.-based supplier of copper cathode, which is going to produce material which they can take the offtake for in the initial years and trade in the U.S. market. So they're providing us $50 million U.S. upfront for the construction capex, and then they have an option to invest an additional $50 million. And at that point, they'd be able to obtain a 10% JV interest in the mine at 10% equity ownership. And so it's a great transaction. Mitsui is a very, it's a great partner. It's great validation, I think, for the technical work that we've done in Florence. And we're excited to go. We're excited to go forward with them. And it also, I think, important, for your listeners to really, that validation of the value of that asset, right? If someone's investing $100 million for a 10% interest, that implies a value of $1 billion for the project, and that shows the opportunity that we have in our stock price here in the coming years as we continue to construct and de-risk the project.
You talked about the value. Where's your market cap right now?
Currently, we're trading around 500 million Canadian dollars. Really, that, in my view, it's frustrating for us. We really don't believe we're getting proper valuation for the development assets. I think the market has a good understanding of what we're doing at Gibraltar, because we report the numbers and the results every quarter. But for whatever reason, we think that if you look at even just Gibraltar and Florence on its own, and knocking off some of our debt, roughly $2 billion of enterprise value there for those two assets net of debt, and we're trading at 500 million. So it shows the upside, and we think most of that value gap does relate to the Florence project, and I think as we get the final permit here, execute on the construction, and successfully start making money at that mine, we're going to see that value gap close, and that's really, again, the opportunity for people out there. So yeah.
And just to be clear, that permit should be, in a perfect world, weeks away, correct?
Yeah, we're very optimistic. We think the EPA is very close to making a decision. We've seen some. We're in regular dialogue with them. We don't believe there's any outstanding issues or concerns that they have, and our belief is they're very close to issuing the permit decision, and that'll be we expect that'll be a positive decision for Florence.
Taseko provides, and just the old Wayne Gretzky saying, "Go to where the puck is going, not where it is." Right? But to me, Taseko provides excellent leverage to what I believe is going to be a pretty substantial rising price environment in the copper space here in the years to come. Can you explain to everyone just the leverage that Taseko provides, and just kind of how you're positioned to take advantage of that?
Yeah, I mean, I guess in simple terms, we produce just over 100 million pounds to our account at Gibraltar. We're gonna, we're adding 80% revenue growth here in the next 2 years. And with our cost profile, a 10-cent move, with our existing production, I mean, a 10-cent move in the copper price is $10 million to $10 or $12 million US to our bottom line, right? And so that's very relative to our market cap. That's a lot of leverage. I would say we're probably the most leveraged copper producer right now, certainly in North America. And with the growth, and with the growth profile too. So yeah, it's exciting, and we're really big believers in the copper story, right? I mean, just the long-term fundamentals are so great.
I appreciate you being conservative and doing the math on 10 cents. I would encourage everyone to do the math on $1 or $2
exactly. Well,
increase in spot
right.
price.
Well, I think that's, I really think that's where it's going, right? I think that, even just a few years ago, most of the analysts were talking about $3 per pound as their long-term consensus. Suddenly, that, in 3 or 4 years, that's changed, and suddenly it's $3.75, $4 that most of the analysts are using. When you look at how many new mines have to be built to actually meet future demand from electrification and the energy transition, I think we need copper prices much higher than that, right? So I think your $5 is is very realistic for us in the coming years, in the next few years here. So yeah.
I couldn't agree more. Absolutely. No, Stuart, I think that was an excellent overview of the company and the opportunity. You're in the right jurisdictions. I think you're in the right commodity. I think you're hitting the sweet spot of this copper cycle. And I think you're going to be very, very profitable for many, many years. And I would be shocked if in 12 months time we're looking at the market cap and it's not in the $1 billion range instead of the millions dollar range, right?
Yeah, exactly.
Stuart, thank you for your time.
That's great.
Looking forward to having you back on. Fingers crossed on the permitting news. And if that does develop within the next few weeks, I would love to have you back on to chat about that.
No, it's very good. Well, thanks again for having me on. And yeah, let's do it again sometime, and we'll keep in touch.
Appreciate it. Thank you again. All right.
Yep. Thanks.
Cheers.
Bye now.
Hey everybody, Gerardo Del Real here. If you're enjoying the content that you just saw, you can let us know in 3 simple steps. Hit the like button, hit the subscribe button, and please share across your network and on social media. Take care, everybody.